Good morning, everybody. It's Thursday, 18th of May. We're going to do our regular Thursday chart analysis. I am just going to wait a minute or two for some of the attendees to turn up, and then we'll get started. And while we're doing that, why don't we take a look at the disclaimer screen that is mandatory. Please take a moment to read it and understand it. Trading is risky. Make sure you know what you're doing. A little bit about myself, those who are on this webinar for the first time. I'm Head of Trader Education at Zenfinex. 20 plus years experience in trading futures, bonds, commodities, basically anything that moves up and down. Here's my contact details. I do webinars. We have a live trading room coming up very, very shortly. Those of you who are interested in joining us on live trading, here's my email address. Let me know. And the agenda for today, we've just done the introduction. Market analysis we're going to do is I want to have a look at some analysis we did on Tuesday on the JPY. It was a request from one of our viewers, and I wanted to just show you how it panned out beautifully. So I will start with that, but then we'll go on and look at other instruments, things like gold, the US indices, UK indices, the FTSE 100. We'll see what everything's doing. We'll have a look at news, upcoming news events today, see how that might impact markets a little bit. And then I'm going to go on to talk about some of the free tools we have at Zenfinex, the Plus Zenfinex tools, and how to access them free. So don't worry that this is not going to be, costing you anything. And I'll run through some of those tools towards the end of the webinar. So let's get straight to charts. And actually, I will not do that. I will go on to look at what news items are going to be affecting trading today. So let's just move this out of the way. This is the Plus Zenfinex tools I just mentioned. And I use this calendar extensively because it's quite good in terms of displaying the things that might be affecting the markets today. And also, those of you who've been in my regular webinars, I use this volatility chart here. I'll come on to that later, but right now I just want to look at any upcoming news events. I believe we have holiday in Europe, so that's going to be quiet sessions across Europe, not in London. So what have we got today? 1:30 we have, let's put medium up as well, just in case we miss anything. So it's high and medium selected. So we had some Japanese news come out, and we'll take a look at how that affected the Japanese yen and how our analysis on Tuesday, literally went to the button. So it's interesting to see how we came up with that conclusion and how that approach can help you with any instrument, whether it's currencies or commodities. So we have some initial job claims around 1:30 US time. Remember, I'm in London, so the time currently is 8:05 in about 4 or 5 hours time. I'll be watching out to see how that impacts, particularly the indices, gold, and various other things. Those of you who've been on these webinars before, you know that my belief is everything is interlinked. So, big important news items move not just, for example, the US dollar. It will have possible impacts on commodities, oil, and such like. There's some Canadian news coming out at 1:30. And apart from that, there are some speeches coming out from the Fed. Usually worth watching, but if it's not highlighted in red, I tend not to, spend too much effort on that. Existing home sales might be interesting at 3 o'clock. It'd be worth seeing how the US real estate markets behaving, because that is another indication of, you know, the strength and weakness of the dollar and various other things. So let's go straight to charts and start looking at a couple of the items that we want to go through. Let's pull the charts up. And I'll start with gold, and I'm going to do exactly what I do, my top-down approach every single time. Although we have some lines here, we have some resistance lines, we have some consolidation zones, I like to every day remove everything and then start again, because as I mentioned before, it makes sure that I don't miss anything, and they're very easy to draw, nothing very complicated. Let's see if we can get rid of all these lines first. And we'll get rid of this, get rid of this. So we start with you know, a completely blank candlestick chart, and I generally start, you know, with the longest time frame that's available. And as we've discussed a number of times on previous webinars, you know, this triple top is actually important. Every time gold has, you know, reached a sort of 220, 230, 240, you know, and it went as high as 260 something. I can't see the number very clearly here, but we can see there's obviously resistance here. That doesn't take a genius to figure that out. And then we can also look at starting to frame, you know, our ranges, obviously from a weekly perspective. Some people ask me, you know, does the weekly really make any difference if I'm intraday trading? And my answer is absolutely yes. Because if you're taking some intraday trades and there is a weekly or monthly or higher time frame support and resistance, you need to be aware of it, because the markets will react to it in one way or the other. So as we're just going through the different time frames, we're starting to build up a picture very, very quickly on, you know, the price of gold and what is the overall picture. So on the daily, so from the daily, I'll start looking at drawing some trend lines. In fact, I'm going to remove that. I think a channel line looks a bit more interesting. So let's start with a channel and then work backwards. So we can see, as mentioned a number of times, being in an upward channel, we know that prices don't move in one direction. They go up and down, up and down, up and down. And that's the beauty of trading, because we're able to take advantage of those up and down moves. So where are we currently from a daily perspective? We can see we hit some resistance. We're inside this channel. We're heading to the bottom of the channel. And what I'm going to do is draw the consolidation zone, which was here. And as we can see now, although I had it drawn in, you know, is it still relevant? Let's take a look. It's easy to put in. We had a zone here. A couple of weeks we were looking for a breakout, hit exactly the previous resistance lines, came back in the consolidation zone, and now really it's looking to see if it can continue its path down after reaching this consolidation zone. So I'm actually going to remove this now, because I'm now more interested in some support levels. So we can see here that from a slightly longer term perspective, we had support here, we have resistance at the top here. So I'm going to go down to the 4-hourly and see if there's any possible trades that we can identify. Let's have a look. So we can see that reached the high, kept going lower, lower, lower. It stopped at the bottom of that consolidation. So we can see here that support, 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 support. We're actually right back up to that level of support. So and it's been continuously going down. Notwithstanding what may happen with news later on this afternoon, we can see that a downward channel really is kind of obvious. Let me just zoom out a little bit so we can all see it clearly. So we can see here, upward channel, up and down, found some consolidation here, hit the resistance, and now it's slowly starting to grind down. It's hit a level of support. Now we're going to see that if it breaks this level of support, will it come and retest the bottom of that channel, which coincidentally is also a level of weekly support. So you can see highlighted on my cursor that this line we drew was based upon a weekly level. So that's why I was saying earlier that it is important to have the higher time frame support resistance levels there, because there is a possibility they may become important even if you're trading on an intraday basis. I've noticed a few people now have joined us. Please, if you have any questions, you want me to cover anything, please let me know. I'll be happy to answer any questions, any chart requests that you may have, or anything else really. So from a pure visual perspective, we have the upward channel. From a longer term perspective, we're hitting some levels of support. We're in a downward channel. And now, what is our next move? So do we just jump in? Of course not, right? So we can see that this area that we are right in the middle of, I'm just going to draw a little box here, a rectangle. We can see here that we're now for the last, remember these are 4-hourly bars, it's been kind of trying to test the bottom of this channel. Now, if I go down to an hourly basis, so each candlestick now is 1 hour. I'm making an assumption that most of you who are on this webinar have a basic understanding of trading. So we can see here, where are the trading opportunities? Well, we know, right, that there's weakness. We know it's being supported by this level of, if I put my cursor over it, a 4-hourly horizontal, so it came down, bounced off it, couldn't get higher than this. So our mindset now is weakness. We want to see if we can get a short, but where do we take the short from? Pointless just sort of jumping in and taking a short. We want to see if there are any entry points that we can look for. So we can see here, as prices came down, created the top of this this consolidation zone, and it's now continuing going down. So one of the things that we could do is wait to see if it pulls back. I know all the last few hourly candles have been red, but remember, it's unlikely just to keep coming down, because remember, we have a level of weekly support that we have to contend with. So I want to really wait and see if I can get a pullback. If my idea is that there's weakness, I don't want to get on the extension. I want to try to get a better entry point, because we don't have a lot of room to go down. Because, for example, if we just jumped in here right now, it could hit this level of this green line of support and then bounce back up, right? Maybe to here, or maybe even back up to here. We don't know. So pointless just taking a short, in my opinion, right? Everybody trades slightly differently. Everybody has their own trading strategies, but for me, I'm going to be waiting for pullback. If I now go to a slightly lower time frame, where could my pullbacks come back to? Bearing in mind that we have this level of support, we have the bottom of this channel, and we have some further support at around 1947. I personally would wait for this. I would wait for it to come down, hit this level of support, bounce back up, probably to around here. Oh, it's too big. Let me just remove that. because obviously there's some resistance, albeit on a very short-term basis. So I'd be looking really to see if we can get a pull back into this area here or a retest. And if it breaks this channel, it will then give us an opportunity, you know, to put a pretty small stop around here. So I use this line here. So we can start developing, you know, from this top-down approach where our ideas may come, where we may want to get in. I particularly don't like this. I want to see some sort of breakout and retest of this consolidation zone. I can make this a little bit smaller because it's just tested here, come back and retested it. So the important levels now that we need to watch for the pullback is for it to revisit these 2 points here. And then as soon as we start seeing weakness, there's a likelihood it will come back to retest the bottom of this consolidation zone, and then maybe even get back down to here, but a bit risky because of things that are in its way. But we're, you know, certainly in the direction of, you know, a 4-hourly trend. So we can see this channel here, but not a lot of room, much more of a scalping intraday type trade. And I wouldn't necessarily take that one. Let's have a look at some analysis we did on Tuesday. I think after a request from one of our viewers, he asked me to take a look at the USD JPY. And I did a top-down approach, created my channels. We found the price had created this range here. So we noted that there was a 618 fib level. And what I had said was that we'll get a pullback either to the 50 or to the 38. And then if it does break this level here, it's more than likely to reach the top. So we drew these lines on Tuesday, and it's done it exactly, almost to the point. And would have been a really nice trade if the gentleman who asked the question took that trade. So it's the power really of utilizing, you know, levels, support resistance levels, fib levels. And this is the, you know, the main toolkit that I use every single day. You'll notice I don't have indicators or oscillators. You know, they may work for other people, but I've never been able to make them work for many reasons. And maybe I'll do a video on the problems of using moving averages and oscillators and how really they work for a while until you get confidence. And as soon as you've sort of taken a few trades based upon a particular oscillator, it will completely go, you know, haywire, and you'll lose all the money that you may have made, you know, testing an oscillator or a moving average. So do be cautious. In my years of experience, support, resistance, fibs, and chart patterns, they're the most consistent because we're not relying on lagging indicators. We're looking forward. We projected this level on Tuesday. We projected that it hadn't reached this level, but if it had reached it, there's things we could do. We looked at even the retest and then going up. So, you know, if you have any questions about this approach, it does work. It just takes a bit of practice, but it's the consistency of doing the same thing over and over again. I mean, what I wanted to do actually is to have a look at the NASDAQ, because let's look at this one I think I drew. So we were watching the NASDAQ a few weeks ago, and we were trapped in this consolidation zone. Yes, you could argue, you know, that's quite a big range here, and you can make money, no doubt. But what I was really waiting for was a breakout, pullback, and then a almost very similar to the JPY, right? It's pulled back, and if I put a fib level on here, oh, that's a channel. Let's get rid of that. We can see we've had that same issue. not as clear cut as the JPY, but look, it broke the 618, came back down, couldn't get past the 38, and it's exactly that ABC pattern that I talked about. I draw a 1-to-1 here, draw the line from there, and it's almost exactly come back into this level of resistance. And we projected this forward. So everything we're doing, we're looking forward, seeing how levels will be affected in the future. And what is interesting actually is that the NASDAQ, which is the tech stocks in the US, they've been on a bit of a charge. And if I look at, for example, the S&P 500, it hasn't had the same kind of pattern. We can see that if I flick between the two, you'll see what I mean. Let's go to this one. We can see here, look, resistance, nice move up, pulled back into the ABC pattern that we just talked about. But if we look at the S&P, it's kind of stuck at this level here, and this is a daily horizontal. And if I could probably get away with drawing another level of resistance here. So we can see prices came back down, bounced, resistance, support turns into resistance, didn't really respect it there, respected it here, and it's respecting it right now. So it's actually very different. So what that is really telling us is that the growth or the movement in the US tech stocks is well in advance of the regular 500 stocks in the S&P. So it's worth noting that, and it's worth noting that it's the tech stocks in the US 100, the NASDAQ, that's really leading the charge. And what will be really interesting is now that we're hitting a level of resistance, we're not quite at the end of the channel. And I'm expecting a bit of a pullback, maybe to the bottom of the channel, for it to continue going up. However, whenever you get a retest, you need to watch very carefully whether it pulls back from it, it reverses from it, or whether it breaks out, comes back into it, and then heads and continues going in the direction of this channel that started, back in sort of October, November of the end of last year. So, what is driving? Well, it's obviously what's driving the NASDAQ. Well, it's clearly, it's the stocks that investors are putting technology in the forefront, and that's going to pull us out of this current situation that we find ourselves in. So keep an eye on the NASDAQ. Notice how the S&P is not behaving in the same way. So we've looked at gold, and we talked about the fact, it's back into this consolidation zone, more of a scalping intraday type of trade here. I wouldn't necessarily be that keen to take this one. Maybe in our live trading room, we could watch it carefully and, trade around it basically. But I do place live trades on our live trading room as opposed to on YouTube, which is a bit more problematic for regulations, etc. So we can see here again, I know we only looked at it 10-15 minutes ago, it's holding up at this lower level here, this level of support, which we drew from top down. I'm now going to look at the euro dollar. I don't expect, let's do our normal top down approach with the euro dollar. Let's get rid of this green box here. And if there are any questions, please don't hesitate to ask. I'm here to help you. And every question usually brings out other information that you might find useful. So look, we're looking at the euro dollar here. We're looking at it from a weekly perspective. We can see that there is support here. We can see that there is, albeit resistance for the last few weeks here. So now we've started to frame where we are right now. We go to the daily. We can see here those weekly support and resistance lines are framing our, our trading ideas, basically. We can see here that there's a channel. In fact, it looks like we might have been sort of starting to drop out of the bottom of the channel. So where we would expect, and I can experiment with this and sort of try to pull this out, but from what I can see is this upward channel has run out of steam, because if this channel had behaved as it should, it would have gone up much more faster and hit this level of resistance here, which it has. And now we're outside that channel, and we have to ask ourselves the question now, is this a beginning of a downward, obviously from a daily perspective, the last 10, 15 days have been weak, but let's now see if we can find places where we might be able to find trades. So if I draw another, there's not enough for a channel just yet. Yeah, all I can really do is draw a trend line. So let's now go to a 4-hourly perspective and see if there's anything there we can capture. Right, so we can definitely put a channel from a short-term perspective down here. So this long upward channel, it's been skirting it on the lower side of it, it's broken out of it, and now it's in a shorter term downward move. And what we can see here, and I'll put them on a daily perspective first, and then we'll go to the 4-hourly. We can see we've got a number of levels that this downward channel will have to contend with, right? So this move up came back down, and it's likely that it'll come and retest it. So if we want to take a short position, we have to then start looking at where would we want to get in. We have an area here where it could be a target from a daily perspective. We go down to a 4-hourly, we can see that same level as a possible target. It looks very similar to gold, doesn't it, if we think about it? Moving down. So every time, I'll just put the cursor up, every time it goes down, it goes lower than the previous low. This high doesn't go higher than that. This low went lower than this. This high didn't go higher than there. This low is lower than here. Those of you know how to identify trends. It's the higher high, lower low concept. And this price has moved up, couldn't get past there, and now they've gone lower. So we are absolutely, certainly from this perspective, showing weakness, and it's been cycling down. So for example, if we get another break from here and it pulls back up, we'll be looking to see if we can get a pullback. I'll start drawing some lines where I think it might pull back to, and then heading down to here. When we hit the bottom of this channel, we'll be moving our stops and trying to gather and try to get it to come down to this level here. So where do we look for an entry here? So let's see if we can identify an area where we could put some orders. Remember, we don't want to just, sell here because we think it's going to go down, because we know, right, that there's pullbacks, and it's the pullbacks that we want to try to capture. So we have a level of where last time it pulled back, and I'll draw another one here just for clean sake. So when this came down, it couldn't come back to this level here. What it did do, it came back to the bottom of this candle. Remember, we're looking at 4-hourly perspective. So now that we have this, there is a chance that prices will come back, maybe. Let's go to a smaller time frame. It's the pullback that we really want to try to identify. Where could it come back to? So prices came back, tried to come down, retested it, and started coming down. So we are looking at this downward move. This downward move will retrace, and it's the retrace that we want to try to capture. So we'd be looking really to see if we can put and the reason why I put it there is because we've got this range here. Here's the top of the range. Here's where it came down, broke through it. It may have already retested it from a smaller time perspective, but it doesn't matter if it doesn't come back, right? If we do get an entry around here, change the color of that so you can see it. So we're really looking for this price to come down, hit this zone here, find weakness, and then we can start looking at targeting the bottom of this channel with some possible support here. So that's the idea that I would be looking at if I wanted to take a euro dollar trade. And if I go to small time frames, we can start looking at, you know, where our stops would be, where our entry points would be. You know, so what we're looking to do, we're looking for it to do this and then come back down to here. And it'll be interesting to see, you know, how the day pans out. So we'll come back to look at that on Tuesday, see if anything, see if it did what we wanted it to. If it doesn't come back to it, means the trade was not triggered. I mean, the way that these candlesticks are behaving, I would probably put it right on the bottom of this. But I'd also want to see some, you know, some weakness, some red candles before we jump in. But certainly there's enough in there in terms of risk to reward. Are there any questions? Oh, Mr. McDonald, thank you for coming in. I don't know if you came in when we had a look at the JPY trade that we talked about on Tuesday. If you remember, we drew these lines. We waited for the pullback either to the 50 or the 38 fib level for it to do an exact one-to-one move, basically. I don't know if you got into that trade, but do let me know if it panned out for you. But it was really based on your request to have a look at the JPY, and it was exactly what we wanted to do. So where did we get to? So we were looking at the euro dollar. We're looking at, from a longer term perspective, weakness, some levels that may interrupt this downward move, and how we can possibly get, you know, involved from an intraday perspective. We marked out the fact that this consolidation area, even on a sort of short-term basis, has been retested. It may come back and retest this for us to take this trade all the way down to the bottom of the channel. And by the way, please don't be shy to ask any questions in the chat. More than happy to answer them, more than happy to look at any different instruments that you might be looking at. So that's the euro dollar. What else can we look at? We looked at the JPY. I think we also looked at the Swissy, but we decided that Swissy on Tuesday wasn't really doing much, other than going sideways from a daily perspective. We go to a smaller time perspective, it's like hit the top of that area here that we drew up last week. Early this week, and immediately rejected it. And what will be interesting now is that if it continues, and this is where the importance of waiting for the news to come out, because the news may have an impact. I see a question here. Yes, it played out after news at 15:30, and can we look at gold? Yeah, sure. More than happy to do that. So I think we've looked at gold already, but I will go back to it. So this Swissy is rejected the top side of this consolidation zone, but it's still displaying some strength. So if I draw a channel, So what we're really looking for this is for it to break out, maybe take the top of this out, and then pull back either into the top of this this consolidation area or even to the bottom of this channel for us to take a long trade. But obviously we need to watch it much more closely than we're able to here. I think the request that I had was, can we have a look at gold? I think we've already looked at gold, but I'll quickly go back over it. So we looked at the longer term perspective, right? We drew this, I think it's a triple top actually. Let me just go out a little bit. Yeah, triple top. Immediately retreated from it. So if I then go out a little bit further, I had a consolidation zone here drawn, which I've removed now because it's broke out of it, it's come back into it. And now we're looking to see how price will react to this bottom of this consolidation area that I will put it back in just to help understand what I'm talking about when I talk about consolidation. It's a very bright color. Let's just change the color there. So this area here, we were watching, it broke out, it came back and retested it, bounced back up, so there was a trade there. Now we're forming a downward channel from a sort of daily perspective. We go down to sort of 4 hourly. We can see, and let me just remove these again, and we'll do it again for the benefit of people who just arrived. Maybe I won't, maybe I'll just go to a smaller time frame. So we saw that we drew this channel from a daily perspective. We can see that there was a fast move down, stopped, came back, and now we've hit this weekly, I think it's a weekly or a daily horizontal line. In any case, the bottom of this consolidation area that we drew. So, as I mentioned earlier, I wouldn't want to be taking this trade because there's not a lot of room. There's support here, there's the bottom of the channel here. So we'd need to look for a pullback. And I think from an intraday perspective, you know, I went through a sequence where, you know, it created new lower lows, new lower highs, and we're trying to see if it will come back into this area here. But as I mentioned earlier, I think there's not a lot of room in here. I would want to see this support level being broken and maybe take a retest on the break of this level of support. Or if, for example, it started its way back up to the top of the channel, I'd be looking at this area here to see if it breaks. So this is an important level here. So the two scenarios, right? It'll either continue its downward channel and hit the bottom of it. For trade purposes, we'll be looking for a pullback to take as much out of it as we can and reduce the risk by putting stops above here. But I don't like it, personally speaking. Just looking at it, there's just not enough room in here for you know, to A, manage the risk, and B, you know, take much out of it. Does that answer the question on gold? If you have any questions more on gold, I'm more than happy to do that. But we're sort of 40 minutes in now. I'm just going to do the last part of the slides, which is the you know, the Zenfinex tools. So let's just go to there. Any more questions on charts before I go on to the Zenfinex Plus tools? Okay, no questions. So let's go to this. So I use these three tools mainly: the technical views, the featured ideas. I will cover at different times some of the other tools are available for free, but I want to just remind everybody that you know, news is what moves markets. And for example, we have at 1:30 initial jobless claims. I use this tool here, which looks at what previous, before I do that, let's just see what the expectation is. So they're saying that that they're expecting 270,000 initial jobless claims. Last month was, or the last report was 264. So let's have a look at how 264 affected prices. So from the previous, so this is previous was 242, and initial jobless claims were forecasted to be 248, a slight increase, but it was actually higher. So what did it do to the euro dollar, for example? And it only really lets you compare currencies, and it doesn't really let you compare gold, but let's just keep euro dollar, which in many ways can be used as a sort of, matching of gold. But anyway, that's something I don't want to go into correlations, but the euro dollar spiked up, came back down, and then more or less ended up exactly where it started, more or less, right? So this is 4 hours after the event. So what this is telling us from the previous initial claims was that even though it was worse than forecast, it didn't really do that much to the euro dollar, which is interesting in itself. So that's quite an interesting tool here. The other tool that is the featured ideas. So this is for users of this platform to look at, what other traders are looking at. For example, the gold AUD found a pattern called the outside bar bullish. So they're expecting a move up based on the gold Australian dollar. Just bear that in mind, it's not the US dollar, which is the most popular instrument. And what it does, it will go through, I've got a Swissy here as well. So this pattern called engulfing line is a bullish flag in effect, basically. So prices moved up and then they came back down. So this is much more for education purposes. I would look at these and just see how other people are viewing, the different instruments that you might be trading. And the technical views takes a minute to load up. We're able to look at, for example, the G7 currencies, and it will give a view. For example, let's see what we talked about, the euro dollar. So euro dollar, they're expecting from a 30-minute chart to show some weakness, even though there's some support here and support here. So what you're able to do with these tools really is to plot these on your own chart and see if it makes sense by utilizing some of the stuff that we just talk about on an everyday basis. It's top-down approach. Where are we in consideration to various time frames? What is the short-term trend? What is the long-term trend? What lines and levels might be impacting us? And then overlay this, and it might either confirm or not confirm your particular idea. So it's quite a useful little tool. Does anybody have any more questions for me? I'll just go back to the slides just to make sure I've covered everything right. So we trade setups using the Zenphoenix tools. In our live trading room, we go a lot more in depth in some of these trade setups, not only the tools provide, but also my live trading as well. So anybody that's interested in joining that free live trading room, please email me. I think I'll just pop this up so you can see my email. And I can put you on a wait list, and then you can join us doing live trading, basically. And this is the portal. It's free, plus.zenphoenix.com. Sign up, no cost whatsoever. I think we just covered a couple of tools here. We included the calendar, but also some featured ideas and what have you. So that is it. I think I have one more question. Where can I get the Zenphoenix Plus tools? So all you have to do is take this URL down, or just type in plus.zenfornext.com, and it should take you to, in fact, why don't I go there now? And I'll be able to show you the actual, no, not this one, sorry. Let's make sure it's the right one. So here's the URL. Make sure that I'm sharing the right screen. So this is the URL. It's free membership, then you can have a play around at these tools, and you know, as I go through them, you can go through them yourself. So it's no cost, but they're quite good for education purposes, to see how other traders are looking at particular markets. And I trade sort of my own strategy in the live trading room, but this is also available to those who are interested. So on that note, we're 47 minutes into this. So I'm trying to make these webinars, sort of no more than 40 minutes if I can. 30 minutes probably would be best, but it just depends on what's happening on charts. Our next webinar will be on Tuesday. They're regular Tuesdays and Thursdays, starting at 8 o'clock UK time, and they last for 30 minutes or so. It gives you an idea on how I look at markets every single day, and you might be able to pick up some ideas from either the tools or from what I use. And also, it's a general approach in terms of the psychology, the risk management, the trade sizing. There's so many things we cover in the live trading room. It really is an area where anything can be discussed, basically relating to trading. So those of you who are interested, email me, and I'll be happy to get you to sign up for that. And that's free as well, by the way. So I'm going to call it a day. Have a great Thursday, and see you on Tuesday.